All right, guys, this will be the sixth entry to the Bitcoin Trading Journal series. Today is Tuesday, March 8th, 2022. I'm just posting an update to the long trade I took earlier. Posted that earlier today, showing an entry around 38888. So now price is kind of moving pretty aggressively in my favor, um, which is nice, but it didn't move initially very quickly in my favor. We're on a Bitcoin hourly chart, but price essentially sort of oscillated around my entry for about 9 hours or so, or the better part of a day before ultimately moving in my favor. Now, if you were to see, if you were to go back to the previous video, one of my stop was based on this low over here. So it was, at the start of the trade, it was much lower. But since prices moved in my favor and taken out 1, 2, 3 take profits, I've sort of been able to move that sell stop up and modify the order size to reflect the reduced position size on this position. So the position size on the starting position is roughly 140, and that represented, sort of my max risk profile for this trading account, based on a set of factors. You go back to some of the previous videos to get some of my high time frame bias for it, but essentially, you have a lot of different time frame confluence around this area, sort of aggregating and giving me more confidence in this trade to max out my risk profile. So if we take a look at the paper trading account, we have account equity balance at 2.68 million. It's a pretty decent increase from previous posting, but essentially, yeah. So as we move up, we hit the first, second, third take profit. First being at 39555, second being at 40333, and third being at 41222. So generally, my strategy is to take roughly 20% profit at each price distinction I identify. That way I don't necessarily have to pick and choose exactly where the market, the move stops. I can just sort of unload risk and start securing account equity as price begins to move on my favor. And as price begins to move in my favor, I can sort of move it up, move that stop up. And, if price continues its rally, then, ultimately, as I take profit and I'm able to move that stop up, eventually, if this move continues, then at some point my stop will be able to be moved up into profit essentially, and that's really where you want to be. Um, right now I have 50% profit booked on this trade, so it's be pretty difficult to to lose money on this trade. Price could ultimately collapse on you and run for your stop, but it's pretty unlikely. Um, let's see, price moved very, very aggressively. So sometimes, I'll add if price retraces within this very, very low time frame, new price swing that's establishing itself. Sometimes I'll add risk, but keep in mind that this initial position size was 140. So even if I do add risk on the retest, I still want to keep the position size much lower than that initial position size. That way, if the price ultimately collapses, that I'm still able to eke out a profit on the trade. So essentially, if price revisited this 39,666 level here, where um, price moves above these highs here, and then it really starts to expand aggressively there. Um, I'd be interested in adding risk here. If you conceptualize this as having 50% profit booked on the trade, then the idea would be that maybe I had 10%, so maybe bump that up from 50% profit on the or 50% risk remaining up to 60%. But the idea being that it's only a modest boost, nowhere near the 100% initial risk. As price sort of oscillates in this region, it will form new, intermediate swing lows and intermediate swing highs that can be operated off. And I would argue that those are the most important. We've already seen this move based on the historical price action, and you can really get. This is really the time where you can, get down on those low time frames and use them to sort of manage your larger positions and pull in risk and take profits and reestablish entries. Um, Now, ultimately, if I go back to that, high time frame idea, essentially, if price runs up, fills this inefficiency here, um, say my initial position size from this level here was 140. So by the time price reaches this, I have this level marked off here as an important price distinction, an important level here. The idea being that, by the time if price comes up and hits this distinction up here, I really, I want to have roughly 80% profit booked on the trade. I'll leave 20% on the table in case, you really just get one of those scenarios where price just sort of rockets through and does a real expansion of volatility that kind of takes everybody off guard. Um, I want to have 20% risk on the table for that scenario just because I want to be able to participate in that type of scenario. But I also, that 20% risk reflects the reality that that's not really the most likely scenario. The most likely scenario is that, price spends some time in this region and sort of operates off these levels, reacts off these levels, maybe even runs up above these highs and retraces. But the idea is that, you want to be booking profit on the trade as the trade plays out in your favor without, being greedy or demanding too much because, ultimately, even if price does run up higher, like it will, there'll be low time frame retracements in there and pauses that, offer you an opportunity to add risk and, maybe re-enter in a different scenario with the same trade idea essentially. Because essentially, really, all we're seeing right now, in my opinion, is the high time frame starting to take effect and sort of play out. And something to keep in mind is that when those high time frames do play out, um, they take their time. So you generally will have, you don't have to worry about, missing the move or be on the wrong side of the trade.